Hi everyone, welcome back. We are in TurboTax right now and we're in the sold a home section. So this is in the first screen. So we just go continue. And I had to set up the stuff ahead of time to save us some time. So remember our example. So we had this property and then for this scenario, well, we say it's married filing jointly, so I just say this property is under both spouses. And then it's gonna ask you to enter the address, so you just enter the home address, and then click continue. And then in this case, you probably do not receive a 1099-S. The 1099-S usually being handled by the title escrow company. It's great if you do, but if you don't, you can select no. And then now you enter the information on the sales. And a lot of time, if you have a settlement statement or sale contract, this will be on that document. So you enter the date sold. So in our example, it's June 30th, 2023. And then our selling price is $800,000. So for the simplicity of our example, we do not have sale expenses, but if you do, you can enter it here. And if you have any question what that is, you can click on the little link and the TurboTax is going to give you some information of what might be constitute the selling price. With that, let's click continue. And then now you're going to enter the date that you purchased the home. So for our example, it's 01/01/14. So if you already know the adjusted cost basis of your home, you can click continue, or you can use the easy guide from TurboTax to walk you through that. So in our case, we're just gonna click continue. And then this question asks the time that you live in your home. So this question is important because you want to make sure that you select the 24 months, right? Because this is that is to trigger the primary home exclusion or the section 121 exclusion. So you want to say yes for this question, assuming that it's yes. But in our example, it is. And then this question is for the spouse. Have the spouse also live in the home for at least 24 months. So we say yes. So did you use this home for anything other than your primary home? So in our example, we only do the installment sale for our primary home, right? Our main home. So definitely we're gonna say no. So choose no and click continue. But if you have any doubt for your specific case, you can click on this link and then learn more. So another home sale. So TurboTax is gonna ask you if you sell another home after 2021. Why? Because the primary home exclusion, you can only do it every 2 years, like every 24 months. So if you have done another one before June 30th, 21, in our example, it's okay. But if it is if you've done one already, and then you're going to be disqualified for the primary home exclusion. Does that make sense? So in our example, we're going to click no. And then this asks about the spouse, so also no for the spouse. And then for depreciation, so it gives you an example here if you take home office deduction or if you rent out a part of the home. So in our example, we're gonna choose no. So the good news, part of the tax-free gain is gonna exclude the $500,000, which is what we want for our example, right? The exclusion for a sale of main home for a married filing jointly is $500K. So if you are single, it's gonna be $250. So because our sale price is really high, so we have a taxable gain on the $240,000 on the sale. This is the question that triggered the installment sale. Payments after 2023. Will the buyer of the home owe you all or part of the purchase price after December 21, 2023? So if you want to trigger installment sale, this is the question that you want to say yes. And if you don't want to, if you don't use installment sale, you would say no for the question. But you know here, your total income is the $240,000 on the capital gains for the sale. And then, you know, your W-2 income in our scenario is $80K, and then we have like a Schedule C. And this is in our example, we use merit filing jointly, so we already be able to exclude it $500K from this gain already. So you could see that you save significantly just on the federal side in this scenario, about $36,000. Well, $36,000 was the jump from not having any sale at all to having to pay capital gain tax on the 240 plus the state. Yeah, the state jumped as well. So I'm just gonna say yes, that we use installment sale. And this is, do you want to use installment sales method to report a taxable gain of $240,000? This means that you will report and pay taxes on the gain each year and you receive principal payment instead of paying all the taxes now. So we're gonna that we want to do this in installment sale. And then this question is asked about the debt assumed by buyer. So in our example, we don't have this. So I'm just gonna click continue. And then now it asks about the principal and interest received. So for the principal, it's gonna be $100K. For 23, for us, yeah, remember that we receive $100K for the down payment, right? And then our interest that we receive for this year, 2023, is $7,000. So easy peasy, right? We just enter it here. So this next question asks if we receive mortgage payment. If it's yes, so we can answer yes if both of the following questions are true. This is a sale of a home, which is intended for example, and also the buyer live in the home as their main resident, right? So we're gonna say yes, and here you're gonna enter the buyer information. So it's the buyer name, their address, and their social security number. So this is just sample that we enter here. This next question is asked if we have ever claimed a depreciation on this home. So we're going to choose no. Is it a related party sale, which means you sold it to somebody that relates to you? You can go look at the link and see what it says. It's a member of your family, your spouse, parent, blah, blah, blah. So in our case, it's going to be no. So remember, in our previous example, we also come up with the 30K, which is 30% of the down payment that we receive is going to be long-term capital gain. So this is going to be taxed on Schedule D. So TurboTax give you the same number, which is great. So it's going to add if there's alternative minimum tax difference in the calculation. We're just going to say no. So there you have it. We have a home sale. So if you click done, and then if you click on explain my taxes and scroll down, so I have some information that I entered earlier, like some simple W-2 information, just really small amount. So you could see, like say for the income, just for the sake of the calculation. For the W-2, I put in 15K, and then you can put yours, of course, right? And then I put a Schedule C for fun. But the important number that you want to see is, you see the 30K, yeah? So this is the capital gains and losses. This is going to go to your Schedule D. And then the interest income that you receive from the buyer gonna go to I believe Schedule B for the 7K. So basically TurboTax is capturing the amount, and then the way that we calculate it is capturing the same amount. So that's great. We got it.